Okay, well, I'll make a start now. So thank you for attending this. I did this presentation about a year ago, sort of during the height of the pandemic, and with RJF, we work with a lot of startups and early stage businesses, and one of the most common things that we're doing for people is trying to help raise investment. It's what you need to sort of get the business up and running, and it was a very different time last year. People were obviously worried about the impact, the economic impact of what the COVID-19 pandemic was doing. But I think things have started to change in the last few months, and really I'll cover that in this current investment environment. So I'll just go through the agenda first, what we're going to look at, and I'll discuss what the current investment environment is, what funding is available and how do you get that, debt or equity, which is the best option for you, what's the differences. If you're new to the invest funding game, then these terminologies you may not be aware of, or you've heard of them and maybe don't understand what they mean or what the benefits and the negatives are of them. We'll look at grant funding as well, and the Innovate Fund. And then the end of the presentation, I'll just go through top 10 tips for your pitch deck, because a lot, to do the fundraising, you always get asked for a pitch deck. So just from the experience that I have had in preparing them and doing them, seeing them as well and presenting, just give you some of the tips that I've come across and think have been useful, and then I'll come on to how we can help. So in terms of the current investment, this slide looked very different last year. Speaking to people, to investors and VC funds, and not just in the UK but around Europe. My background is that I did work overseas for quite a while. I lived and worked in Switzerland and in the Netherlands, so I still have contacts and connects there that I speak to in terms of friends and professional, but also I did a lot of mergers and acquisition activity in one of my roles there in the Netherlands. And what I found interesting was that I found that record sums are being invested into startups so far for this year, which last year was very different. Investors that I've spoke to said it's a hyper competitive market, and people are throwing down bigger checks, and what I found kind of unusual as well is that deals were being closed in a matter of days. For people maybe who've got experience in this or who are on the call who do investments, it might be different from what you're speaking to or experiencing, but certainly from the people that I've been speaking to, more so in Europe, I'd say, people that I spoke to over on the continent were saying that deals were closing quickly. Also notable was the sums of money that was being deployed. The people that were deploying that, there was more growth equity investors investing at early stages, and this was kind of pushing VCs, venture capitalists investment into faster and being more competitive. There still is uncertainty in the economy, very much so, but I thought that was interesting over the last few months how the investment for startups has changed. Banks are still lending, and there is an opportunity for lower interest rates due to the current environment, although starting to see that go back up now. And there is money available for businesses that offer products or services that can help in the current situation that we're in with the COVID-19 pandemic. Here I've got a list which is quite useful, and it's an investor list, and if you would like a copy of this, then I can send it you, and it's in the presentation as well in the link. And this list it's updated live. It's sponsored by a firm called Kenso, and it's a list of investors across the UK and Europe, and some US in there as well, and it tells you who they are. It's got contact details, whether they're funding at the moment, what type of funding they do, what sectors they do, check sizes, what they're looking for. It's a really good list, and it's definitely worth having a look at if you are on the fundraising path, because it'll just give you some idea of what investors are looking for and who's open to investing. So if you would like a copy of that, you can, like I say, it'll be in this presentation, but you can also drop me a line and I'll send you that. As I said, it's kept up to date, it's real time. So what funding is available right now and how do I get that?
Look,
so there are different types of funding, and again, if you're kind of new to this, being a startup, some of this terminology you may have heard of or maybe not experienced, you know, what this is. So I thought I'd just spend a couple of minutes explaining the different types of funding available and what they mean. So equity.
At the moment, I'm trying to do.
When you do equity funding, this is when you sell a share of your business in return for money. There's equity finance schemes, such as the Seed Enterprise Investment Scheme. I'll touch on that later as well. I'll go into a bit more detail of what that is. And that's very attractive from an investor point of view, as it can offer up to a 50% reduction on income tax for that investor. And there's some criteria around that. Debt is when you borrow money from the bank or maybe alternative lenders and you have to pay that back with interest over a period of time. The difference with equity is you don't have to pay that back. The investor is taking a risk and he's putting money in your business, and if the worst does happen, the investor will lose his money. Grants, these non-repayable funds often granted by governments or foundations or innovative companies. Grants, I'll touch on about grants and how to sort of get them and go into them in a bit more detail. So I've touched on debt. So yeah, that is very limited for startups. There's a lot of risk for banks or lenders with debt because it's a brand new business. There's not really a track record and there's no real assets in the business. Banks do like to see accounts and record of trading. There are startup loans available which are government backed. Basically, a startup loan is a personal loan, so you don't get it in the company name, so you do lose that protection of limited liability that you have with a company, but the loan must be used for business. So you can't apply for a startup loan and then go and buy a car, for example, unless it's a car for the business, a van or something like that, but you can't go and spend it on yourself. It has to be for business use. Often they will ask for personal guarantees, not with the startup loans, but if you do get a loan through your limited company, personal guarantees will be requested. And a personal guarantee is basically if you cannot pay that loan, if the company cannot pay that loan, then the lender can come to you personally for that money. Debt is available for startups, though. It's not all sort of doom and gloom with debt. Debt is available if security can be provided. So there are funds out there that if you can get a guarantor or if you've got property, they can put charges on them for debt. Debt is risky because you are, from day one, you're committed to paying that back. So in your cash flows and in your forecast, you've got to factor that in and be comfortable that you can pay that back. So there is a lot of risk with debt. But the advantage, I'll come on to the sort of advantages and disadvantages of debt and equity. In terms of grants, there are hundreds of government grants available for small businesses. Government grants for new businesses in the UK. They cover a range of rewards, from if your company is saving money, so they can help you save money on premises and rates, or buy cheap plant or IT equipment. They come in a number of forms of grants, but it is a minefield. And also getting a small business grant for the government can be very difficult. It can be a challenge from a point of view of the application process, but also in terms of the length of time. They're often complex and lots of processes and stages, and each grant will have its own requirements and criteria for applying. Most small business grants are awarded to help startups or new businesses, and the aim of them is to generate jobs and stimulate the economy. That's why the government offer these grants. There are fewer grants available if you're a more established business. There is I'm not going to go through in the presentation how to apply for the grant, but in the presentation there's a little guide there on how do you apply for a government business grant. In terms of debt and equity financing, there are pros and cons of both. In terms of debt, which we've covered, is you borrowing money from a bank or an alternative lender. the advantage of that is you keep full ownership of your company. You're not giving away any of your company. You keep that 100%. Once you've paid that debt, there's no obligations. The debt's gone. That's it. Everything's done and dusted with it. The interest that you get charged on that debt is a tax deductible expense. You can get short-term debt or long-term options and give you more cash on hand. In terms of equity, equity is less risk than debt, because when you do equity finance, as I touched on before, you're given a share of your company in return for money, and the risk is with the investor then. So if the worst does happen, the investor loses out. There are different types of equity deals that can be structured, and that's not really for this presentation. So this is just a general overview of equity, but there are certain equity funding where there can be like convertible loan notes, or where the investor does need something back after a certain period of time. But as a general overview, it is less risk than debt. You don't have to pay back the money, so when the investor puts the money, there's no requirement to pay that back. But as per my previous point, there may be certain equity deals which you might have to do that, but in general, you don't have to give that money back. Once you've got equity finance, it does gain credibility through investor networks. Usually investors follow other investors. Sometimes you find that one investor will not invest unless another person does, and then if another person does, other investors think, oh, I'm missing out on something here, and you can find yourself having quite a few investors coming on board then, as if one does take that leap. Investors, they don't expect an immediate return on investment, so they're in the long-term game, and they're not expecting to get the money back in 3 months or something like that. They do expect 3, 5-year plan, and the fixed payments, in terms of debt, you don't have a fixed payment, so it's better for your budgeting. I mean, in terms of disadvantages of debt, I've already touched on, you've got to pay it back no matter what. That could cause you cash flow issues, because you want to use that money to invest, and if you're not getting the revenue to be able to invest back in, and you've still got the commitment of paying your debt, then that can cause you cash flow issues, and collateral's usually needed to get that debt. In terms of equity disadvantages, I touched on investor returns could be more than debt payments. So, you are giving away some of your company, and they do expect what's called a dividend payment or some type of return. So they are going to expect that you're giving away your company. Investors get some ownership of your company, and you may have to consult those investors for every decision or any key decision that you're going to have to make. So you've got someone on board who's invested in the company and may want to have more involvement in running that. I mentioned EISS and EIS at the beginning, and what these are tax incentives for investors, and why they're important for startups and early stage businesses is if you have this in place in terms of what HMRC called advance assurance, it'll make you more attractive to investors. And it's always one thing when we have new clients or a new startup come to us, we always recommend to get the advance assurance from HMRC. Now, HMRC have actually changed and said you don't need advance assurance, and you can apply for the EISS or EIS once you've got the investment. But I know from experience, you want to know that this business is eligible before you put the money in. So I think it's still get your EISS and EIS, and it does make the process in terms of when you apply for the certificates for the investors a lot quicker. So we'd always recommend to get that done from day one. So what is it? Well, the Seed Enterprise Investment Scheme and the Enterprise Investment Scheme, they give the investor big tax incentives for investing. So in simple terms, under the Seed Enterprise Investment Scheme, if I invest £100,000 into your company, depending on what my tax bill is, HMRC will give me £50,000 back. So really my investment is £50,000. That's in very simplistic terms. EIS is less, that's 30% tax relief. There is eligibility requirements. So to be eligible for the SEISS, your trade must be less than 2 years, and under EIS 7 years. You must have less than 25 employees under SEIS and 250 employees for EIS, and gross assets must not be more than £200,000 for SEIS and 15 million for EIS. So SEIS is more focused on the early stage companies, and there's a lifetime cap. So to get the SEIS, there's a cap of £150,000. So an investor can put up to £150,000 to get the 50% tax relief. They can still put in more. Anything over can be classed as EIS, and that has a maximum 2. So it's very attractive for people. I won't go through all the points in there because they'll be in the presentation in terms of how it's exempt from capital gains tax and deferment and what happens if you lose your money. But for you as a startup or an early stage business, get the assurance. And it is quite easy to do the assurance, the form. What the challenge with getting the application is HMRC can be quite slow in coming back to you, and they may have a lot more questions. So what we do, because I've done so many, I know what they're going to ask for, so I preempt and give that with the application to make sure it goes through. Because if you submit that, it used to be that they'd reply to you and say, thanks for the application, don't contact us within 90 days. After 90 days, they'll have a list of questions, and then it's another 90 days while you wait for a reply to the questions. They've cut that. I think they say now it's 30. Well, I know it's 30 days now. So they have shortened that period, but still 30 days. It could be 30 days and another 30 days once you've replied. So it's best to try and preempt all the questions and using someone who's experienced doing that to be able to get that assurance through. The UK government announced an Innovate UK fund last year for startups and small medium-sized businesses. This was focusing on research and development, which was to be made available through Innovate UK. There was £750 million worth of grants and loans pledged. I have seen clients get these grants, and the process hasn't been as arduous as other grants. And usually the grants are like match. So if you get a grant, say for example for £100,000, they may ask that you match that grant, so you may have to match it with £100,000 yourself, or it depends on the grant in terms of percentage. But the Innovate UK fund has been pretty good from experience. So some general tips from real life experience, as I touched on that in terms of RGF, we help a lot of startups and early stage businesses in terms of getting investment, and myself have done investments too. So I wanted this opportunity to share some experiences that I've had from clients and also when I've invested. So how long will it take to get funding is one of the main questions. And I suppose going back to the previous points about the different types of funding, debt funding can take a very short time, providing you're sort of ready to do that, and you've got all the things that I mentioned before in terms of collateral and prepared to give guarantees and things like that. Those debt funds can come quite quickly. Equity is a very long game, very long game. Some get lucky, but typically you could be looking at say 6, 12, 18 months. You do end up kissing a lot of frogs if you're going through equity before you find the right partner. And one of the things I always say to people looking for money is make sure you choose the right type of funding for your business. We touched on before the differences between debt and equity, but choosing the right investor is also very important. It's very easy to sort of take the first offer you receive, because someone is throwing a cheque at you and throwing money at you, and you're kind of really excited about having that cash and you just take it. But I've seen happen on a lot of occasions where they take that and the investor is not the right person. it's not always about what money they have, it's what else they can do for your business. Can they open doors to markets that you would have never got into? Can they bring an infrastructure to you that can help you grow your business? It's really important you do choose the right one, and don't just look at the money that they're offering. It's important to have a good team of advisors around you. If you're new to this, then have the people around you and experience to be able to guide you and for you to bounce ideas off and to help you move into the right direction for your investment. One thing, speaking to VCs, venture capital funds and private equity funds, they don't like is cold calls. You won't get through. They don't like it. So, make sure it's a warm intro. Again, that can come from the advisors that you choose, making sure that when you do speak to a VC, it's someone's referred you to that, and it is a warm intro. One thing that I do see, people have pitches and they don't tailor them for the audience. They'll use a general template. So always check who your audience are, what the background, and tailor your pitch. Once someone's got a pitch that they kind of think that's it done, I don't need to look at it again and do it, and they use the same one for every single presentation. So always have a look at who your audience is and tailor that pitch deck to them. Crowdfunding is another option. I've done a few crowdfunding raises. They can be difficult if you're using something. Well, crowdfunding doesn't matter which platform, but Crowdcube or Seeders. There's a lot of noise on there, so trying to get your business on there to be above everyone else is very difficult. It can take a lot of money to do that, which is kind of a catch-22 because you're a startup, you've not got the money, trying to get crowdfunding. Crowdfunding for you, for those who do not know what that is, crowdfunding is where your business, you put a pitch onto a crowdfunding platform like Crowdcube, and you get lots of investors pitching in. You can set a minimum investment and people put money in that who are subscribed to the Crowdcube platform. The beauty of that is you don't have to deal with each individual investor. Crowdcube can manage that for you. But you can get funding quite quickly if your company is right for that platform. It's expensive in terms of the fees that the crowd platforms take. But as an example, I did a crowdfunding campaign for a business a couple of years ago, which was one of my own. Now, fortunately, we have money to put into marketing to get that, and we hit a raise. We hit a £500,000 raise on Crowdcube. But it cost about 150,000 in terms of marketing, PR to try and get that. So it can be difficult with the crowdfunding side of things, but it's something that could be looked at as an alternative. And also a real one for business owners is make sure you know your numbers. In the presentation there's a blog there which I wrote last year about knowing your numbers, and it's one thing that can fall down very, in terms of investment. Most of you probably seen Dragon's Den, and when you're on there and you can see that all the dragons are very excited about an idea, and you think, yeah, this could be the next money-making thing for them, and they're really keen to invest. But then as soon as they ask any questions about finances, they go cold. They say it's not for them. The entrepreneurs doesn't understand what his break-even is or what his runway is. And why would they give the money to someone like that who doesn't really understand how much it costs to sell their products or service, or if they're making a profit, or how many units they need to sell before they make a profit? So that can put investors off if you don't know your numbers, no matter how good or how brilliant your idea is. So in terms of the presentation, the last bit, I was just going to touch on pitch deck, because a pitch deck is an important part of an investment raise, not just equity, also debt. Banks probably don't tend to want a real big in-depth pitch deck, but they're going to need a business plan, they're going to need an idea of what the business is, so the pitch deck is important. But this has been more tailored around sort of equity investment. Also, if you were to go down the Crowdcube, you'd have to do a pitch deck. So there are some do's and don'ts. Usually I would look to have a presentation prepared which you can pitch your idea, business plan in less than 20 minutes. I know that might sound short, but typically with investors, they get so many pitch decks, and I'm not going to be rude to speak about all of them, but a lot of I've come across have short attention spans. So having 20 minutes is a good idea to have the entire day of business planning in that 20-minute slot for them. I remember one investor. He was a high net worth, and he used to have someone come round his house with pitch decks, and if he didn't get it within the first 2 pages, he just threw it in the bin. Just excuse me a moment, I've just got to let someone into the lobby because someone's coming in. So decks, should be about 10 pages long. If you put a lot of images, it's going to be long. It may be few more pages, but I wouldn't get too hung on how many pages it is. It's just about making sure that your idea and business plan it gets over to that investor quickly. But in terms of a deck, what should it include? So what I've done here is listed the 10 components that investors care about most and how you should approach them. And this is just from my experience. So if you're an investor or you've got experience of this, there may be other things that you think as well. But this is from my experience. And I'll show you an example of a deck which we did. Incidentally, that is not 10 pages, but there's a lot of images on there which boost the number of pages on that. So the first one, cover page, I have seen investment decks without this. The cover page should have your logo, business name, and a tagline. The tagline should give an insight into your company, and it'd be easy to remember. So, for example, we had a Groupon for X or something like that. And also remember to include your contact information. I have seen them without contact information, and you'd be surprised to see how many people do forget to do that. And it is important because your debt may get passed around and may forward to someone else. Someone might say it's not for me, but have a look at this. This might be for you, because investors and angel investors do talk and share ideas. So it should be really easy for that person to track you down if they're interested. Summary also the next page. Summarize all the information before you present it, and use that opportunity to get your audience interested in your company. Really talk up the most interesting facts about your business, really sort of detail the huge milestones that you've hit as well, because the investor wants to hear positive and good stories. Team, have a slide which shows who the team is. Investors are not just putting your money towards your idea, they're investing in you, and if you've got a team around you, they're investing in the team. They need to know that the people who they are going to invest in will make this successful. Make sure to include your background. They want to see how relevant your background is to the idea and the business that you've got. And then if you're fortunate enough to have a team, or if you've done something yourself, then highlight successful exits. Investors do like to see that there's people here that can take a company to acquisition, because ultimately taking it to acquisition is where they get their money back, or they get a return. Sorry, not just the money back, they want a return. So if you have any important advisors, also list them. But one thing I would do is make sure they know that you're using their name. We had one not long ago, and using quite a famous sports person name. She knew him. She knew, she grew up with him, but he didn't realise that she was using his name on her investment deck. Problem. So you need to be explaining the problem that your concept's going to solve. So in terms of a logical order, first of all, you explain what your problem is, and you need to prove to these investors why they need to care about solving it with your product or with your service. Then the next step would be the solution. So you've said what the problem is, you've explained why that should be of interest to the investor, and then you've explained what your solution is. This is the value proposition that you bring into the table. If you have a demo of the product, then this is the time to show it. Include case studies that you have to show that your product has worked for existing customers. Marketing. You'll want to show the market size for your product. This can include profiles of target customers. Be prepared to answer questions. This comes back to knowing your numbers. What's the cost of acquiring these customers? If you don't know, this is a red flag to investors. If you have got sales, then discuss your growth. and discuss your forecast and what your assumptions around that forecast revenue are. And then you come to your financial projections for a startup. So if you don't have a long history as a startup, your forecast is just a guess. You know, it's a finger in the air, but it needs to be educated guess. You know, so probably contradict myself. Not a finger in the air. It needs to be a really educated guess. But investors know that because there isn't a track record. But if you haven't got much to write in terms of what you've done in terms of financial history, focus on the milestones that you've already achieved. For instance, include that you've acquired 1,000 customers by a certain date, that you've partnership with certain companies, that you've signed major customers, or you've got letters of intent from major customers, and outline that you'll be cash flow positive by Q3, for example, or something like that. But list those milestones and projections. Competition. Every business has competition. So even if you think what you're offering is new, it's unique, it's never been out there, it's not true. List your competition and why your product service is different from their model. If your competitors have been acquired, then list what they've been acquired for and who's acquired them, because that will also pique the interest of the investor, because they can see actually there is an appetite, and as I touched on before, their return on investment, that where they see getting their money is at an acquisition. So if they see that people are buying companies like yourself, then it will make them certainly more interested in investing in you, because they can see where they're going to get the money back. So yeah, put in your competition, and also why you're different from that competition too. Why what you're offering or selling, or the services or product or invention is better than the competition. Business model. So every investor wants to get his money back, so it's important that you do tell them how you're going to generate revenue. Show different revenue streams for your model, timeline for each, how you price your product, what does your competition charge, lifetime value of customers is also important, and how you keep them engaged. Really go into sort of depth about your business model as much as you can, because this is where the investor needs to be convinced on how he's going to get his money back. Then include financing. If you've not got any finance, then you would obviously leave this out. But if you have already raised money, talk about how much, who's invested, what you did. If you've not raised money, you can still talk about what you've accomplished with your own funding, minimal funding, or if you've personally funded your startup, make it known, because investors like to see that you've put your own skin in the game, they call it. You've invested your own money. If you've got other investors, then also they're happy. They're really happy to see that too, because they can see that other people have risked their cash. So again, it goes back to that point of fear of missing out. And then if you're pitching to raise capital, list how much you're looking to raise. And then this is also important, how you're going to use those funds. I see that missing a lot of the time. People say, I want 500,000, 20% of my business, and then there's nothing in there about how they're going to spend that. Or they may just give you a very high level overview, marketing. That's the most common one. I'm going to spend it on marketing. Well, what marketing? How are you going to do it? How are you going to measure your return on investment on that marketing? So yeah, do explain how you're going to use those funds. So these topics. I mean, that's just my 10 points that I've seen from decks and from experience. There may be others, but that's what I've experienced. And the topics that we've discussed, they are critical when pitching to an investment community. But I'd always say be ready for questions. Do prepare for the presentation. Learn a bit about your audience. Anticipate their own passion points. I found that having there could be more, but 3 talking points to keep your investor engaged and interest. They love to hear about press that you've received. Highlight any large barriers to entry in your field. That means that in terms of the field that you're operating, if it's difficult for other people to get into that, then highlight that, because it indicates that you've got limited competition, and that your concept is first to market and can have exclusivity for a longer period of time. Investors are always thinking about the exit, so have a strategy in place and be able to talk about it. That exit could be the sale of the business, sale to competitors, you know, on the basis that you're making a lot of noise, they want to buy you out because you're taking market share for them. It could be an IPO, you know, initial public offering listing. Have a think about that and do put it in your presentation, because this is what investors want to see. Go back to the point, they're in this to make money, so they want to see how they're going to make money, how you believe they are going to make money if they invest in your business. This website I found really useful, honestopinion.io, and if you've got a deck ready, you can just click on this website, upload your deck, and they will give you an assessment of it. And I've done it myself, I've had a few clients do it, and it's been really good. They give you a really good opinion of your pitch deck, so it's definitely worth having a look at that before you present or when you've done a pitch deck, because they'll give you some really good tips on that. So that's honestopinion.io. So, I mean, in terms of how can we help you? Well, as I've kind of touched on, I've got a lot of experience of helping startups and early stage companies get investment. I've made investments myself. I've raised money for my own companies too. So I've got that relevant experience to help you get investor ready. We can build finance models and pitch decks, keeping accounts and records. We are an accounting firm as well, so we would keep all your records up to date and produce financial information and key statistics that investors would want to see. I've got that, you know, we've got that real life experience as business owner investors. We've been in your shoes. You know, I've been in businesses where you're thinking, you know, bloody hell, how am I going to pay wages next week? And I've been in businesses where you think, you know, things are going really well. How do we expand on this? We can introduce you to investors, funds, and business angels. So, you know, if you would like to arrange a meeting, feel free to contact me. In this presentation, there is the link there. You can see you can arrange a meeting if you'd like any help with your fundraising. So in terms of, I mean, that's it for the presentation. Like I say, you can ask me any questions. You can all unmute yourself and ask if you like, or just put it in the chat box. I just wanted to show you kind of, you know, with the last couple of minutes, just a quick overview of a deck, if that is important. Again, I can send you this. There's nothing confidential because this is done, this has happened, it's passed, and also I have changed some sensitive information in it. But as you can see here, you know, I touched on 10 pages. This is 16, so I've gone against my advice there. But this was quite image intensive. So, you know, we have, you know, it's all about the introduction here, what we did, the highlights, some key finance highlights, and what the funding requirement is, a bit about the team, what the problem is, the solution that we offer, and what the competitive landscape. So on here, you know, this business we had IPI. We can see what we did compared to the competitors. Quite, you know, an easy to read graphic for an investor rather than sort of text and pages of text. You know, what our model is, how we're going to generate money, different licenses. You know, this just talks about how we're going to generate money, what the market's like, the size of the market, equity fund, how we're going to use those funds, you know, what the structure is, and you know what stage of investment this business is. Cash flow turns positive by the year of end of year 2, and what our estimated margins are. So we've included in that, and then a quick overview of finance. So finance section doesn't need to be pages and pages of detail. The detail you need, because when you get past the next stage, they want to see that. But in terms of the pitch deck, I just did a quick overview. So, you know, where the money was going to be spent here, you can see the funding spend, profit and loss, cash flow overview, number of users. This was a SaaS business, and then a little P&L table there. But you know, it's important to put in how we're going to spend the money that we're expecting to raise, what the exit plan was or is for the business, key value drivers, and then that was it. So the contact details, so they know who to contact. If you'd like a copy of that, like I said, there's nothing confidential in there, so I'm happy to send that. I won't send that out with the presentation. I'll just send that out upon request. So I'm just trying to stop sharing now, because that's the end of that presentation. So yeah, well, hopefully you found that useful. If you got any questions now, then by all means feel free to ask me. If not, then you can always ask me by email or contact details. The contact details are in the presentation. My email address is robjones@rjf.uk.com. If you want any help with fundraising, if you want me just to have a look at your pitch deck and give you some pointers, happy to do that. You know, no obligation, no charge, don't mind just helping out, or if you'd like sort of introductions to investors, then there's a bit more detail there, because you know, before I introduce, I've got to know a lot more about your business, as you probably could understand, and what you're offering. But yeah, happy to have a call at any time. And that's it really. So yeah, hopefully you found that useful, picked up some good points. If you do require any of the information that I presented today, as I said, I'll send out the pitch deck to you all in terms of the email addresses I've got. And the other thing, the sample pitch deck, just ask for that separately. And the links to the things that I've shown you are also in that pitch deck. So yeah, I mean, if there's no more questions, then I can end this. I'm also doing a recording, so I'll give you the recording for this too. There's a couple of questions coming in, so I'll stay online. Thanks, Toyin. Okay. No, well, thanks for your comments. Not any questions, but thanks for your kind comments. I'm glad you found it informative. Yeah, try and keep it direct, not fluffing lots of slides, but yeah, just sort of from my experience, showing you what I've come across, and you know, people have different experiences, but that's just generally what I've seen. Okay, well, no, I'll leave that then. Well, have a good day. Thank you for your time. Thank you for attending the presentation. And if you are fundraising, then good luck with everything. And I'll hopefully speak to you soon.